Andrew, thank you so much for joining me today.
Thank you.
I mean, what is your view on how the market has been trading? Because it's slowly gaining momentum and then it falls back on a negative piece of news. What is your view on the trading kind of activity and levels we're seeing?
Yeah, it's a bit of seesaw up and down. I think obviously the sentiment around Europe is the big driver at the moment. We see some weak numbers, or say weak numbers. Apple had earnings disappointment, they only grew their earnings 20%. That's obviously played on markets overnight. So as I say, it's a bit of seesaw again. It's pretty directionless at the moment.
I mean, you'd think that's a specific issue with the company, and earnings of 20% for a company that is valued at such a level is pretty good. And Caterpillar came out today raising its 2012 forecast on the back of construction demand, and the CEO is saying that this doesn't feel like 2008. I mean, that's a very bullish statement.
Yeah, that's obviously great news for all of us. I think looking at the Caterpillar numbers, that means a lot more about what's happening in global economic growth than what the Apple numbers do. We obviously overweight construction at the moment, so these are
You're obviously overweight construction. Explain that statement.
Construction shares are deep value at the moment. We're seeing it across the board, right from your larger companies from Avenge, Wilson Value Homes, down to your smaller Basil Reeds, those sorts of businesses.
And what about Barloworld? It's not quite the same.
Yeah, Barloworld, we might see a short-term run with these Caterpillar numbers coming out, but I don't think there's anything really to read through to Barloworld from those Caterpillar numbers. Barloworld at the moment looks a little bit pricey, so we don't have exposure there at the moment.
Interesting. British American Tobacco share price underperforming today on the back of the earnings results that came through. Your thoughts on those numbers? 5% increase there in first half earnings, and a worrying signal that you're seeing volumes come under pressure.
Yeah, I think it was a slightly disappointing earnings release. Although headline earnings per share was up 6%, I think a stronger pound hurt those numbers slightly. If you look at their big competitor PMI, who obviously makes your Marlboro cigarettes, these guys underperformed PMI. Having said that, British American Tobacco is a very defensive company. In good times, people smoke. I think in bad times, they probably smoke more.
Well, it seems that the trend is changing, though. I mean, it's not as fashionable to smoke these days, and you wonder why in the developed world they do highlight that. Yeah,
in the developed world, I think it is slowing down. You are seeing volumes decline there. However, when you look at Brazil, Mexico, Eastern Europe in particular, Romania, Russia, you're seeing strong volumes growth. So I think that's helping them. That exposure to the emerging markets at the moment is really helping them. And you can see it in their share price. I think since listing in 2008, they've gone from about 200 Rand to over 400 Rand today.
Is it still a buy, though? I mean, where British American Tobacco, almost 430 Rand. It was the top performer last year.
I don't think it's a buy at the moment. It looks pretty lofty on a P of about 20 times after these earnings. Dividend yield is very nice, so it is a nice dividend payer. However, I wouldn't be rushing there.
As a deep value investor, certainly
Definitely not. No.
ACI, also some disappointing numbers. HEPS decreasing almost 60% to 108 cents. And they talk about that BE transaction. Are we able to strip that out and take a look at the underlying business?
Yeah, I think if you strip out that BE transaction, you get a headline earnings per share decline of about 5%, which is slightly disappointing. There's no denying that. It's the explosives division which came under a bit of pressure. I think they had some supply constraints. They had to import ammonia, which added to their costs. However, the chemicals division, I think, did really well. Chemical commodity prices hold up well, and a weaker rand obviously helped there as well. I think the second half of the year we can look forward to some better numbers out of there.
So possibly a buying opportunity today, given the fact it was one of the biggest fallers.
Yeah, I saw the market reacted negatively to these numbers. We do like ACI. We do hold it in our house view equities. It trades on a forward P of about 10 times, and again, it's a dividend yield of about 3%. So from our perspective, yeah, I'd say it's a buy.
ArcelorMittal South Africa doesn't give us much reason to be optimistic about buying the company. That's at least, how I'm reading the numbers there, because there's not a positive outlook that we heard from the CEO today. She said this isn't going to be, an optimistic view of the world, and the way their earnings have been performing for some time and the way the stock has been performing, is there any reason to be buying the stock?
Jeez. I think it would take a very brave investor to go and buy the share right now. I think what the results highlight today is poor visibility of earnings. These numbers came in way below consensus. I think consensus headline earnings was about 75 cents and they came in at about 25. So visibility for the next quarter and even quarter 4 is very difficult to see, and from their outlook, we're not expecting anything great going forward. So no, it's definitely not a share that I'd be.
Okay, so then let's move on. We're just kind of running through all the earnings reports today, and Truworths, of course, was a top standout today. It was sitting up over 3% on the day. A strong trading update coming through from the month of June. JD Group, on the other hand, falling back today. Do we continue to buy into the story? And I know that, for example, you would probably say that it's just too expensive.
Yeah, I think these retailers have run exceptionally hard, and obviously it's foreign buying that's pushing them up to these levels. I read a report today saying that foreigners would be willing to buy these on a forward P of 20 to 30 times. So I suppose they could keep going if you look at it from that perspective. From a value perspective, definitely not. We think these continue to be exceptionally expensive. Likewise, I think does the rest of the domestic market.
Yeah.
However, still
giving foreigners enough reason to buy the stock.
Exactly. I think I think what they're looking for is growth in a low growth environment and yield. That they're nice yield plays, and these companies have proven to be able to grow in these low growth environments. So I think that's what I can't
let you go before talking about MTN, because we've seen that share price continuing to trend higher across 150 today, 151. Any reason that we saw this nice bounce in the price?
MTN, I think over the last year has been quite volatile. You've seen a trade between, I think, 130 Rand to 150 Rand, and it's touched both those levels on numerous occasions. It's had quite a bit of bad press of late. Obviously, the corruption around the Iranian license and then the Turkcell allegations. So they've had a bit of bad news. However, I think it's still a great business. I think like Vodacom, these are cash generative businesses. They continue to add subscribers. They've got very nice margins, and there's not a hell of a lot of competition out there. So I think from that perspective, they're great businesses to own. MTN is probably slightly more risky if you look at the exposure into Africa and Middle East than Vodacom is, and it trades on a slightly higher PE or premium to what Vodacom does. They're both nice dividend payers. So yeah. So
you wonder how that share price is going to trade tomorrow?
Yeah, we'll see tomorrow. Yeah.
Thanks so much for joining us today, Andrew Dittberner, Senior Investment Manager at Cannon Asset Managers.